Excellent. Well, I'm pleased today on the InsurTech Leadership podcast to be back with a repeat guest, one of the select few, Woody Klemmer. He is the head of growth at ForMotiv. Welcome, Woody.
Thank you. Glad to be here. Appreciate being the second time on.
Yeah. So, for those who may not be familiar, ForMotiv captures the digital body language behind every insurance application, things like hesitation, corrections, edit patterns, and turns it into real-time risk and conversion decisions for the majority of the top 10 US carriers. This conversation matters now because ForMotiv just hit profitability. Agentic AI fraud is rewriting what carriers need to defend against. And ForMotiv has defined 2026 the year of enterprise intent. We'll cover what changed when carriers shifted from direct dominant to agent dominated volume, why behavioral data is one of the few modes AI doesn't compress, and what fraud looks like when the bad actor is a model running a script. Woody, anything you'd like to fill in on that?
If you want me to just sort of react to that, sure. Unless that you want to start with a specific question, I'm happy to go either direction.
No, well, I mean, I guess the broader question would be, what's changed since we last talked? What are you seeing, in terms of the inflection points you're hitting now?
Why don't I also just sort of start from the beginning? I'm assuming while I might be a repeat guest, there might be some new audience members. So ForMotiv is a behavioral analytics platform. So what we do is we embed on really what started as just direct D2C policy opening. We now work in this sort of, not to spoil it, but bleeds into that whole concept of enterprise intent. And we'll get to that eventually. But basically what we do is we embed on, let's just use policy opening, for example, and we capture what we call digital body language. So it's how people actually physically engage with online applications. And then we're able to predict their intent. And intent could be good intent, like how likely is this person or how unlikely is this person to purchase a policy. It could also be bad intent, meaning, over the last decade or so, application integrity is down tremendously. You've sort of seen this in the whole thesis and premise of our businesses. Right now, carriers are faced with what we call a growth paradox, which basically means while they try to grow, the mechanisms that they use to grow typically revolves around, in order to improve the user experience and increase conversions, you remove friction. The unintended consequence of that is by removing friction, you inadvertently increase risk and fraud. So all the same tactics that carriers use to grow their business also at the same time has this counter effect of hurting the bottom line. And that usually catches up, 12, 18, 24 months later. And I think that's part of the reason why you see this pendulum swing constantly in insurance every couple of years. They're focused, hyper focused on growth. 2 years later, it's completely changed and they're completely focused on profitability, underwriting risk, fraud. And it's not like they don't want to grow. It's just they have always had this either or choice. And so what we do and the whole thesis behind our business is if you can understand the intent of the end applicant, you can apply what we call a dynamic experience, which basically is instead of one static experience that every applicant gets, it's individualized to the end user. So when you're filling it out, if you're really high intent, or maybe you're low intent, but you're low risk, they might want to treat you differently than somebody who's really high intent and really high risk. And just to pause on that for a sec, carriers typically, when they think of intent, only think of purchase intent. We think of that as a two-dimensional plane, right? There's one is like, how likely are you to buy a policy? And if this person is super engaged and really likely, and we can pick that up during the application process, your gut might be, let's try to convert them, do whatever we can, convert them at all costs. But are they high intent because they bought a car this morning or because they backed into their garage this morning and they realized they didn't have the proper coverage? And those two people are both high intent, but when you look under the surface, they're wildly different impacts on your bottom line. And so our whole concept as a business is give carriers this new layer of what we call behavioral intelligence, where we can use the behavioral data to predict various outcomes about the end user and agent, and I'll sort of get to that, so that they can create these experiences, intervene in real time, use the data offline. But at a high level, that's the concept of the business. We have use cases spanning marketing and growth, which is super popular right now. Usually when that's going on, that's when we start pounding the table on, let's put the underwriting risk measures in place. Let's put the fraud measures in place. So when you get the directive from the C-levels that say we need to tighten up profitability, you're not starting from scratch. We have all those mechanisms in place, whether you're acting on them or not. So that was the focus for a long time. And, in the last 24 months, I'd say we have pivoted the business is completely the wrong way to put it, but we have expanded the business and started adding new solutions where before we were hyper-focused on direct to consumer. Last year at our company onsite in January, we called this the year of the agent. And this whole concept 10 years ago that agents are going away and everything's going to be disintermediated and everything's going to be direct, we just have not seen play out. We, for the first time ever, sold more agent-related solutions last year than direct, which I think is just a maturation of our business in the sense that we now have multiple channels, multiple workflows, multiple, again, distribution channels and products, solutions for all of the above. So we had a huge year last year with agents, and it might, it's maybe no shock to anybody in the industry, but agents know how to game the system, where a direct user might know, they might be able to kind of play around and game it from a risk perspective. Agents know the important underwriting questions. They know the certain thresholds by states. They know if they keep mileage underneath a certain amount in certain states, it's a non-rating factor. They know how to get a policy approved and then go in into endorsement 2 weeks later and maybe add a riskier driver or youthful driver to the policy where maybe they would have gotten a totally different rate class or declined, or sold to a new business. And then lastly, and then I'll stop talking and let you, ask a question, but just sort of encompass your whole first opening. This year is what we're calling the year of enterprise intent, which is we're now embedding on policy opening, both direct and agent, call center, policy admin, all the way through to claims. So you can think about it as just a comprehensive, unified view of a user from start, the minute they hit that get a quote, all the way through to maybe a year and a half later, 2 months later, whatever, when they file a claim. And so we have this unified view that provides context that carriers currently don't have, given most of these systems are traditionally pretty siloed and don't communicate with one another. But we're able to provide this layer of behavioral intelligence across the enterprise, again, to help with better experiences, more growth, better risk protection, better fraud protection, all of the above.
And apologies if this is kind of a dumb question or if you feel like you've already answered it, but it sounds like intent can mean a lot of different things. So is intent one thing with sort of different windows into it, or is intent sort of multiple things that get woven together?
Intent is intentionally broad for us. If you were to kind of ask 10 people in the industry, what does intent mean? I bet you 9, maybe 10 would say purchase intent. Intent to us, it's not good or bad. It's just what is the end goal of the person behind the screen, behind the keyboard. And so again, it's why we keep it sort of intentionally broad. But underneath intent, there's all these different combinations of how people and how we would profile and create personas of individuals. And I don't know if it's always the best decision to only, again, focus on one plane. If you only focus on conversion intent, you're missing this huge critical part of the equation, which is how profitable is that customer? And carriers are starting to get there. And so, the ones that have always been doing conversion models are now starting to bring in lifetime value data. They're starting to bring in claims data. They're starting to bring in, different maybe misrepresentations or, different things that during the application or verification process resulted in premium leakage and adjusted premiums. So they're starting to think about these things. And we just have a unique, very predictive data set that gets them to be able to do that significantly faster in real time during the workflow so they can actually take action on it. And so I don't know if that answers your question, but for us, it's just a catch-all because there's so many different personas underneath, but really just if we were to break it into two, it's purchase intent and risk.
Yeah. So within that, it could be intent to buy, intent to renew, intent to shop a policy, intent to lie on an application, intent to lie on a claim, those sort of things.
Exactly.
So there's a lot of companies, you were talking about sort of acquisition of bad business. And I think everyone talks about a couple of notable companies that sort of say in personal auto tried to go against folks who, know that industry inside and out, know how to price in that industry, and essentially, acquired large books of not very good business that those companies that really understood the market well didn't want and were more than happy for others to take. So there's that sort of acquisition of unprofitable business, but is there sort of a more nuanced view of that in terms of what you guys are able to do, and that second portion of what you were describing?
Yeah, if I'm understanding the question correctly, it's actually interesting because we had a carrier say the other time the quiet part out loud, which is, at this point, we work with a majority of the top 10, and they were one of the ones that we're not working with. And they said, our worry is we're getting the bad business that you're helping protect the other carriers from.
Yep.
It's a little bit of a flywheel there, or sort of a network effect when you think about it like that, where if we're helping, there's an adverse selection. If we're helping carriers identify bad risk, and then they, like the huge new use case right now is they're all monetizing their applications. It's not just about converting. They're saying we're spending gobs of money getting them here. Now it's, we wrote this article, like they're competing with Google, where this is a warm lead. If we can sell this and recoup some of our customer acquisition costs by monetizing and selling to a different carrier, overall, that's a good thing for us. And so we're seeing that start to play out in terms of they're not rejecting applications. We're not like a yes, no. We don't help say, don't give this person a policy. We just say, hey, this person might be a risk that you're not willing or, not really willing to take on. And then they'll sell that lead off to another carrier who might, have different risk thresholds than they do. So that's how we're starting to see that play out. And, I think just there's so much that goes on behind the computer screen that we've figured out. I mean, it's no secret. It's right. People lie about everything. And I always kind of kid. It's like your dating profile. I was an inch taller in my dating profile. Like there's just things that people do when you're behind a computer screen, when you can check the quote, go back, edit information, check the quote again, remove your teenager, check the quote again, change your garaging address. There's hundreds of things that people do. And, we're helping identify those instantly so that you can price the risk accordingly. The other kind of final piece on that is what we started to see too, that we have had carriers say, like, this is actually a positive, is there is some portion of walk away where if we do catch it and the rate doesn't come down the way that the person manipulating it wants it to, they're going to walk away. But that was a bad risk. So you're saving that business. You're saving yourself from that bad risk. You're missing some of the premium, but overall, that is likely an unprofitable policy for you, and much higher likelihood to file a claim, and potentially a customer that you'd be underwater on. So, we're seeing a lot of that too.
Yeah, I guess maybe my question when I was driving at is I think there were some instances where it was sort of obvious, almost like at a macro level, when you looked at the industry with some maybe the insurtechs that came in, where in retrospect it was like, oh, that was a bad idea to kind of go after that business. I was wondering sort of how nuanced it maybe gets within some of the books of business.
I don't know if I can speak to that totally specifically. It's not like we're looking for like new populations of people for them to go after and bring into their business. Like we have no role in that. It's just every carrier is trying to grow. They're all figuring out how do we grow and how do we grow more profitably. And it's ultimately always like, how do we create the best user experience? And if you create a better experience, you increase conversions. Again, that goes all the way back to the first thing I said, which is reducing friction. So if we can apply a have your cake and eat it too equation, where it's We'll help you grow. We'll help you understand their intent. We'll help you convert the mid-intent buyers and do something real time to get them to convert, monetize your low intent, short track your high intent, all while helping protect against those likely to have an early claim, those likely to, churn early, those likely to have, left significant details off their policy. You're just inherently creating a better, more profitable book of business with the same people that are in your funnel. And you're making the most of the people. Like, again, I think the top 5 carriers spent like $5 and $10 billion on marketing last year. I mean, it's an insane amount of money.
Yeah.
It's like one of the highest, I think, behind ambulance chasers. It's like the highest click on Google is for auto insurance and things like that. So you're already spending all this money. If we can help you spend it more affordably and increase your lifetime value to acquisition costs, it's a good thing for the carriers.
Yeah. So maybe just to flip it around a little bit. So you're co-founder of the business, head of growth is your title. So how have you managed sort of the trade-off of speed of growth versus, the right growth in the business, the right go-to-market strategy?
Yeah. I mean, for us, there isn't enough. We could never say, oh God, we're growing too quick. We're luckily in a very capital efficient business. Like, our solutions work and implementing them is really easy. We don't need to go out and hire 100 people to support the next 100 customers. We could double the size of our business and barely have an impact as far as the, employee count of our business. So for us, it's always, and this is just something we were told forever ago, is like, be prepared to make money slowly when you're selling to carriers. They're very risk averse. They move slowly. There's a lot of red tape. They don't, there's a lot of talk at conferences and things like that about the new solutions, but you can sort of tell, like, this will be our 7th or 8th year at ITC. You can see the cycles of different types of companies. Blockchain, you heard a lot about 2 or 3 years ago. You never see anything there anymore. This year it'll be AI like it was last year. But we work with all these carriers. We know exactly what they're doing. We know their appetites for different risks. And so for us, it's just about, building the relationships. We know we almost always get, if it's never a no, it's a not right now. We have to re-platform and then we're going to bring you guys on. Things like that is what we contend against. Like, when people ask who are your biggest competitors, I always say bandwidth and budget. Is we have to compete against other priorities. And if that other priority is we need to migrate to the cloud, it's a tough sell because, that's food, shelter, water, right? And we're sunscreen. We're protecting you, but we're not a necessity for you to live until we're integrated. And then it becomes sticky because then we can become part of your workflow. But, for us as a business, it's just slow and steady. It's build the relationships, get in front of the right people, and then land anywhere we can within a carrier and then expand. And that's how, we didn't have some crystal ball or some visionary Steve Jobs, if we build it, they will come type, business. It was our carriers have led us to where we are. They're the ones asking, hey, can you actually expand over to call center, to policy, into claims, to login screens, all these other areas that they're seeing our software and saying, can we apply it here? And our answer 99% of the time is like, yeah, let's do it. And then that leads to the new product innovation that we have. And then it's sort of a flywheel, because then other carriers say, oh, wow, we want that too. And that's how we manage growth over the last few years.
Build on the FOMO. So it sounds like that's one kind of, principle you guys had, and tried to push, but understand you have to be patient. Was there an assumption you arrived at in the insurance industry or at the start of ForMotiv that you've completely tossed out at this point because maybe it was incorrect?
Yeah, that everything was going direct. That was like, when we were first getting going, that was when every one of those insurtechs was coming out and raising a ton of money, and we'd be at conferences, disruption and all this stuff. And if you followed them, most of their stocks, they've either gone out of business or their stocks are down tremendously from 2021. And I'm sure they're going to continue to do well. There's a lot. The one thing that they succeeded at short term was they did disrupt the user experience, and they made it so that the incumbents had to adapt. They had to change. They had to go direct. They had to start creating these better experiences. So I think it was a forcing factor for a lot of those carriers, but we were just hyper focused on direct for a while. And then that was where all of a sudden it was like, well, hey, what about our agent platform? Can we put this there? And we were like, yeah, why not? It's going to be different. It's a totally different integration. There's different use cases. But one thing that we learned there was like, while there's analytics on the direct side, the Google Analytics, and there's heat mapping and session replay and stuff like that. And there's maybe some like form analytics, but not a lot. There's like nothing on the agent side. And so there is a dearth of agent analytics where so much of it is like a monthly report that they get, or, the agent oversight or agent management is, it's still pretty old school in that sense. And some carriers are more advanced than others, but a lot of the time what we hear is like, we don't know how agents are filling out apps. We don't know how to make the experience better for them. We have this like AX, agent experience solution, that we just sort of threw in as an, oh, by the way. We didn't realize that carriers were like, they were really struggling to say, we have thousands of independent agents or captive agents, and we know what their sales are. We ultimately know what their loss ratios are, and we know certain things about them, but there's so many gaps as far as what the data is. And so we've built this whole like agent benchmarking, agent scorecarding, agent experience. So you're not just saying we just want to police them and figure out what are the agents that are removing youthful drivers 10 times more than the average, but we can compare Josh as an agent against yourself and then against the rest of the agent population. So they can start to dig in, and they're using it for training, for new hires. There's a lot of different things that we're able to bring to light for them so that they can obviously tighten up on the gaming. I mean, we're finding hardcore agent fraud too, like legit hard fraud.
Yeah.
And now they're using us in the SIU and claims and things like that. But like, that was the biggest assumption, was not that we didn't like over index on it, but the agents aren't going anywhere. And, people still I'm sure there will continue to be creep, and people will increasingly want to buy online. But at the end of the day, that was a big one. And, we've come a really long way in the last 2 years solving for that.
Was there, and is there still possibly any kind of executive misconception about behavioral data?
In what sense?
Like the value of it, what it really means, how you can use it?
I would say we're getting increasingly towards table stakes. Like, if you'd asked me that probably at our last conversation, I would say carriers are still figuring out, okay, this makes sense. Like, I get it. Well, what do I do with it? How do I use it? How do I operationalize it? And we never wanted to just be a data company where we say, hey, here's a bunch of behavioral data, figure it out. And so maybe that's another misconception is and you're starting to see it across multiple industries, but like the Palantir forward deployed engineers, now they're branded like, we're just going to put a sales guy in your office. We don't do that literally, but figuratively, what we do is we just get incredibly deep on an individual carrier basis into their workflow. What interventions do you currently run? When, how, why? We want to understand down to the granular detail how they operate today, so that we can best serve them and help us help you, help us understand your process so that we can configure solutions specific to your workflow and your application. And we've done that enough times now where we can be very consultative, because we'll have certain carriers come to us and say, this is what we want. And we have most come to us and say, we get it. We know other people are using it. It makes sense. Can you help us get there? And we're good working, either way. And we've been doing it long enough. We consider ourselves the industry leaders and experts in behavioral data. And so we rarely run into hey, I don't believe in it. It's more so, do we have the bandwidth to operationalize it? And we've made that even easier. So,
and I'm curious, like with actual agentic AI, and I know some people will argue what an agent is these days, but regardless, assuming that agentic AI is here or coming, does that change anything in terms of the signals you're looking at, and able to use agents to replace certain human behaviors or replicate certain human behaviors?
It's a topic that's been coming up, I would say, exponentially. So I would say, and I hate using these big, industry buzzwords, but like we're on the cutting edge of AI, agentic AI detection. So we have, we've done a ton of R&D on that. We can identify it. The real question for carriers is right now they're we don't know what to do about it yet. The obvious one is just block it, but they're trying to figure out, first and foremost, can you figure out if it's happening? And the answer is yes. It's way less frequent than you would think. I think there's been a lot of headlines about it. And, hey, there's different comp raters and stuff that say you can do this through ChatGPT, and you do it, but it's like saying, you can book your flight through ChatGPT, but you can't actually do it. You get to a certain point and then they boot you over and then you do the whole thing all over again. So it's really, I don't want to be naive and, one of those blockbuster CEO quotes of like, no one will stop doing this, and then Netflix comes along, but I'm sure it will get a lot better and eventually it's going to catch up. But for us, the mechanisms of how we detect it and what we look at it is exactly what we've done every other step of the way. It's what does it look like? How do we detect it? And then what do you do about it? And we're able to detect it. I think, again, we're still in that wait and see period for how carriers want to handle it and whether or not, like a lot of them will say, we don't want to be on the comp raters. And so you can't rate through their comp. Well, they say, we don't want to be on the agentic comp raters, or we don't want agents to be able to fill out applications. But, the behaviors are different than a human, obviously, but it's not that dissimilar from the bot, behaviors that we had. It's just, there's a different name for it. So, it'll be interesting. I'm really curious to see how they eventually, if they embrace it, if they fight against it. Fighting against it, is that fighting the rising tide? I don't know. I don't think anybody knows.
Yeah. Yeah. What about just sort of, third-party AI rules, regulation of AI in the industry? Does that impact you? Does that create increased opportunity for you? Doesn't impacts you, but doesn't really necessarily move the needle one way or the other?
It impacts us in a couple ways. The first is the amount of new security documents that we've had to fill out. Shout out to our CTO who handles those, pretty quickly. But I think right now it's a concern for carriers. I think they're worried about it. We're in one of the most highly regulated industries in the world. So I think the concepts of, again, I don't want to put my foot in the mouth. Yeah. Maybe this will be dumb 5 years from now, but I think the concept that like AI is going to come in and you're going to have some black box underwriting engine in the next few years is asinine. I just like the requirements that for even just getting a rate increase in certain states is really, really difficult a lot of the time. So to think that, again, there's going to be, when you factor in biases and where's the data coming from and all these different things, I think it's going to help a ton right now with operationalizing back office. There's going to be so much streamlined efficiency due to it. I think the whole concept of underwriting and things like that is a little further down the road. But no matter what, we view it as a tailwind for us, because right now, when you have carriers coming to you saying, hey, can you do this? It's always a good thing. And right now they're all coming to us and saying, can you identify it? And the answer is yes. And so then the next question again is, what do we do with that later? It's up to them, but we can do that today. And then of course, like internally, we're using it. We're more productive. Again, going back to, we're not a super capital intensive business. Yeah. That only helps us, right? Like we don't have to go out and hire 200 more people to hit our next growth milestone or raise a ton of money to go and do that. We're super lean, we're efficient. These tools have made us more productive internally, but so yeah, I mean, it impacts us in those ways, but it's nothing we're scared of. We're, it's exciting. I think it's really cool, and it'll be interesting to see how the industry evolves, and we'll be along for the ride.
I know we're kind of maybe getting a little bit over time, but one last question. So there are so many models like racing to ingest first party data now. Like, does that impact you guys in any way?
Yeah, I mean, I think that sort of goes back to what we view as our moat. We've been doing this for almost a decade. We have by far the industry leading behavioral data set. It's all first party. It helps us make our product solutions better. It adds more. The more data we capture, the better it is for everybody, ourselves, our clients. There's more value to be had. So we truly view that as, a network effect, a virtuous cycle, a flywheel, whatever you want to call it.
Yeah.
But for us, it's a total tailwind, because carriers are looking, like, we've had a carrier, top 5 carrier that, is running predictive models. They're all looking for data that's going to make their models more predictive. And you get to a certain point where it's like, where can we get more data that isn't the data we already have? And then all of a sudden we have this new behavioral data set that says, that's new, that's first party, we can use that. And lo and behold, it's improving our models that we've been running for 10 years. And we're seeing this big jump in predictive lift, right? Like, I think that's the type of benefit that we and they are seeing. Is just, it's a new data set. It's not something that they've had access to before. And as those continue to come out, I think of it like satellite imagery for flood risk and stuff like that. It's like, where do you find a new data set that's predictive that helps? And we're one of them.
Yeah.
Does that answer your question?
Cool. Yeah, no, it does. I guess part of it was like, do they try to, if they're ingesting other data, do they try to play with it themselves? But it sounds like it's more logical just to leverage what you guys can bring to the table rather than try to reinvent the wheel.
Yeah, we get that question, like build versus buy. We haven't gotten it in years. We got it a lot more in the beginning, but we actually had somebody say this the other day to us. They said, hey, we just looked at, what it would take for us to try to rebuild this of what you're doing. Like, the JavaScript component isn't the value. You can go and code that and pick up some behavioral data points. What we've done over the last, again, almost a decade is like calculating the data points, understanding what data points do you want to capture? How do you create the actual equations of how those calculations work? We had someone say, like, time spent. What does that mean? There's 1,000 different ways that you could slice that. We've got hundreds of millions of real insurance outcomes that we've used to flywheel, not just the data we're capturing, but then the ability to ingest tens or hundreds of thousands of data points in real time, make sense of it, do the calculations, create the behavioral features, organize them so that they're, by most predictive, and then feed it back to you in 40 milliseconds. There's a whole underneath engine and platform that makes that incredibly difficult for anybody to try to replicate, given if you were to start, they told us it would take them 3 years. 3 years just to build this portion. And then they're in a silo doing it by themselves with no industry learnings. Like, we have a cross-carrier intelligence network. What benefits a fraud spike over here benefits everybody. Yeah. So all of a sudden you're deciding to, instead of playing the positive sum game, you're just going and doing your own thing. And the amount of time, energy, effort, cost to then run your own behavioral analytics company will always outweigh what it would cost for you to just use us, which it's all we do. And we're only getting better at it. And we're only adding more, value to you as a company. So it has not come up in a while. And even with, AI coding and stuff, it misses the mark on what makes us unique and, tough to displace.
Yeah. Well, Woody, thanks for sharing your thoughts. Anything else before we wrap up?
No, just maybe, I don't know how we post this, but my email is just wklemmer@formotiv.com. So if anybody watching this is interested in having a chat,
Yeah, it'll be
always open.
in the show notes when it ultimately goes up on YouTube and on the different podcast platforms.
Awesome. Yeah, no, that was great. Thanks for having me again.
Yeah. So Woody Klemmer, head of growth for ForMotiv. Thanks so much for joining me on the InsurTech Leadership Podcast.